There's a strange kind of silence that surrounds every great invention at the moment it first appears. A hesitation, a laugh, a raised eyebrow. When Bitcoin emerged in 2009, in the shadow of a global financial meltdown, most of the world saw it as a gimmick, something nerds tinkered with in basement forums, a digital toy to be mined on cheap laptops and forgotten sooner or later. Few, if any, imagined it would grow into a trillion-dollar asset class, spark a global economic debate, and challenge the way we think about money itself. Yet here we are, more than a decade later, watching corporations move billions in and out of Bitcoin, governments build regulations around it, and ordinary people argue over it at dinner tables as if it were politics or religion. Something clearly changed. Or maybe something ancient simply reawakened. That leads us to the question at the heart of this exploration, one that feels simple on the surface but becomes more intriguing the deeper we look. Has anything similar to Bitcoin ever existed before? It sounds like a yes or no question, but it's not. Because to answer it honestly, we must step back, far back, beyond computers, beyond modern banking, beyond the idea of government-issued money. We need to trace the story of value itself to understand what people used as money before cash, before banks, even before writing. Only then can we see whether Bitcoin is truly unprecedented or simply the latest chapter in a very old human desire, the desire to store value, to trade freely, and to trust something bigger than any single person or institution. Bitcoin wasn't born out of thin air. It emerged from frustration with a system built on trust in authorities that sometimes fail, inflate, intervene, or collapse. When Satoshi Nakamoto published the Bitcoin white paper, it was more than a technical document. It was a declaration of independence from the financial establishment. It proposed a new kind of money, borderless, permissionless, resistant to censorship, governed by code and mathematics instead of politics and power. For the first time, money could exist purely in the digital realm without needing a bank, a government, or a king to validate it. No previous currency had ever achieved that. But here's the paradox. While Bitcoin is technologically new, the idea behind it may be as old as civilization. Human beings have always sought forms of money that are scarce, durable, transportable, verifiable, and, most importantly, trusted. Sometimes that trust came from rulers, sometimes from rare metals, sometimes from collective agreement within a tribe or island. The form changed, but the purpose remained. Money is memory, a story everyone agrees to believe. Bitcoin simply moved that memory into cryptographic time, secured by energy and computation instead of physical artifacts or authority. To explore this mystery, we'll travel through history, almost like time travelers stepping through different eras of human trade. We'll visit distant islands where massive stone disks served as currency without ever moving an inch. We'll look at gold, a metal humanity has obsessed over for thousands of years, not just for beauty, but for scarcity. The same scarcity Bitcoin seeks to replicate in digital form through mining. We'll examine the rise of banknotes, the promise they held, and the problems they created when that promise was broken. And only then, when we've gathered the clues scattered across time, will we return to the present to meet Bitcoin again with new eyes. No longer as an isolated invention, but as a culmination of countless experiments with value. In this first chapter, I want you to imagine that you're standing in front of a river that represents the entire history of money. At the far end, beyond sight, are primitive trading systems where goods were exchanged directly, grain for sheep, tools for labor. No Bitcoin there, not even money as we know it. But walk a little further, and the river starts to change. Shells appear, stones appear, rare metals appear. Suddenly, value becomes symbolic. Humans begin to understand that money doesn't need to be useful. It only needs to be trusted. And trust can come from scarcity, from energy required to obtain it, or from a shared belief. This is where, in subtle ways, echoes of Bitcoin begin to emerge long before the first line of blockchain code was written. Think about what makes Bitcoin valuable. Not because someone says so, not because a central bank prints it, but because the network agrees it has value, because it is scarce, because acquiring it requires energy, computation, and time. Now imagine ancient islanders hauling multi-ton stone disks across the sea, risking storms and death to obtain something the community recognizes as valuable, even if the stone never moves after that. The similarity isn't perfect, but the pattern is there. Human beings have always worked to create systems of value rooted in effort, scarcity, and consensus. Bitcoin didn't invent this pattern, it inherited it. In a sense, Bitcoin is both old and new. Old in spirit, new in execution. It answers a timeless question with a modern solution. As we move through this journey, we will uncover those earlier attempts, both physical and digital, that tried to capture the essence of trustless money, some succeeding for centuries, others failing almost immediately. We will study how societies adopted money, how empires rose and fell because of it, how trust was built, abused, and shattered. And when we finally arrive at Bitcoin again, it will no longer look like a mysterious outsider. It will look like a natural, almost inevitable outcome of everything humanity has learned about money through thousands of years of trial and error. So take a breath. Step with me into this river of time. We begin not with code, but with history. Because to understand whether anything like Bitcoin ever existed, we must first understand why money exists at all. And once we grasp that, the answer will not just be informative, but transformative. To discover whether Bitcoin has predecessors, we must leave behind the modern world, with its glowing screens and Wi-Fi connections, and step into a time when value was tangible and often heavy enough to crush a man. Before the blockchain, before the internet, before electricity, people still needed a way to trade. They needed something that could hold value, something that wouldn't rot like grain or rust like iron. And so, money began as objects with intrinsic or perceived worth. Shimmering metals, polished shells, even enormous carved stones. Primitive? Perhaps. But beneath the surface lies a conceptual seed that Bitcoin would someday inherit: scarcity, consensus, and proof of work. One of the most striking early examples can be found in a place far removed from financial markets or the noise of global economics: the island of Yap in Micronesia. The people of Yap used rhinestones, giant discs carved from limestone, some as large as 2 meters in diameter. These stones were incredibly difficult to obtain. They had to be quarried on distant islands and transported across the ocean on wooden canoes, sometimes over hundreds of kilometers. Many never survived the journey. Those that did were celebrated, honored, and placed in public spaces like money on display. Here's where it gets interesting. The stones rarely moved. Ownership could change through marriage, trade, or treaties, but the stone itself often stayed right where it was. The community simply remembered who owned which stone. If this sounds familiar, it should. Rye stones didn't need to be physically transferred, just as Bitcoin doesn't need to move through banks or be held in hand. Their value was not based on utility, but on scarcity and the work required to obtain them. The community acted as the ledger, collectively maintaining records of ownership. In a sense, Yap Islanders practiced a form of decentralized consensus long before cryptographic protocols existed. No central authority controlled the currency. Value lived in the shared belief of the people. That belief, more than stone or code, was the true foundation of the system. Of course, rye stones were limited by geography and could not scale beyond their island. But the conceptual DNA is unmistakable. Scarcity, verification through effort, value sustained by consensus. Bitcoin isn't a giant rock, but the logic behind it has ancient roots. Now, shift forward in time, across oceans and continents, to another symbol of value that has captivated humanity for thousands of years: gold. Unlike rye stones, gold has beauty, utility, and universal appeal. It doesn't rust. It can be melted, divided, shaped. It takes tremendous effort to extract from the earth. Miners risk their lives in tunnels. Empires wage wars. Nations store tons of it in guarded vaults. Gold is scarce, shines with permanence, and has, for millennia, been a store of wealth. Yet look at gold through the lens of Bitcoin, and you'll notice an uncanny parallel. Bitcoin mining consumes energy and computation to solve complex puzzles. Gold mining consumes labor and fuel to extract metal from the ground. Both rely on proof of work. Both produce an asset that cannot be conjured out of thin air. A Bitcoin block must be earned. A gold nugget must be dug. Effort creates value. Scarcity preserves it. But gold has limitations. It is heavy to transport, expensive to secure, difficult to divide. Throughout history, these limitations forced people to create substitutes, paper certificates representing gold stored elsewhere. This is where trust entered the equation, and trust, as history shows, is fragile. Governments discovered that if people trusted paper, they could issue more paper than gold backing it. Wars were funded this way. Economies inflated and collapsed this way. Trust turned to suspicion, and money became a promise, not a guarantee. Bitcoin emerges as a response to this flaw. It seeks to be digital gold without the need for vaults, trucks, or promises. It cannot be printed beyond its predetermined supply. No king or minister can decree more units into existence. In that sense, Bitcoin is not merely similar to gold, it is gold reimagined for the digital age, with physics replaced by cryptography and mining tunnels replaced by server farms. But Bitcoin's ancestry runs even deeper. Long before governments minted currency, communities relied on social consensus to define value. Beads, feathers, salt, cattle, whatever the culture, the principle remained constant. Money works when enough people agree that it does. This is the same consensus mechanism that keeps Bitcoin alive. Unlike fiat currency, Bitcoin doesn't rely on authority. It relies on mathematics and a network of participants that validate transactions, one block at a time. Across ancient marketplaces and medieval kingdoms, you can find threads of Bitcoin's philosophy woven through history. Cowrie shells circulated across Africa and Asia for centuries, prized for their rarity and beauty. Roman soldiers were paid in salt, a commodity essential for survival. Native Americans traded wampum beads as currency, with patterns representing agreements and contracts. None of these systems were digital. None were decentralized by design. None solved the double spending problem or offered cryptographic security. Yet each carried fragments of Bitcoin's essence: scarcity, shared belief, effort-based acquisition. They were physical stories of value, written not in code, but in culture. As we move closer to the modern age, the pattern becomes clearer. Humanity continuously searched for better money, more portable, more divisible, more secure. Every step was an upgrade. Stones became metal. Metal became notes. Notes became bank balances. And eventually, inevitably, bank balances became digital. But digital money had a catch. It required central authorities, banks, servers, intermediaries, entities that could freeze accounts, reverse transactions, or inflate supply. This is the point where Bitcoin breaks from tradition. It removes intermediaries entirely. It allows strangers to transact across continents without asking permission. It embodies the dream that money could exist outside control, outside borders, outside manipulation. But that dream wasn't born in the 21st century. It was whispered through history again and again, each time people sought fairness, stability, autonomy. So when we ask whether anything similar to Bitcoin existed before, we must answer delicately. No technology matched Bitcoin's structure, but many currencies throughout history reflected Bitcoin's spirit, its core values, like ancient echoes waiting for technology to catch up. In the next chapter, we will step into the era right before Bitcoin was born, when computer scientists and cryptographers tried to build digital money, systems that looked surprisingly like Bitcoin but never fully worked. We will see how each attempt failed, how each failure taught a lesson, and how those lessons became the foundation of the world's first decentralized digital currency. If you are ready, we move forward, from ancient stones and gold to the early experiments of the digital age. As the world moved into the digital era, money began to detach from the physical realm. Balances were no longer bags of coins or gold bars in vaults, but numbers stored in databases. You didn't need to carry wealth. You could send it across the world with a few clicks. Yet beneath that convenience was a dependency on institutions. Banks verified transactions. Governments issued currency. Corporations developed systems of online payment, each acting as a gatekeeper. Money became faster, yes, but also more centralized than ever. The dream of a digital form of gold, scarce, borderless, trustless, remained unsolved. Still, there were thinkers who dared to try. Long before Satoshi Nakamoto appeared under the glow of cryptography mailing lists in 2008, a quiet revolution was brewing. Computer scientists began asking a radical question. If the internet could connect minds across continents, why couldn't it also support native digital money? Not money as a representation of something physical, but pure digital value, transferable, unforgeable, independent. These pioneers didn't just imagine it. They built prototypes, and though their systems failed or faded away, each left behind a crucial puzzle piece that would one day fit perfectly into Bitcoin. The earliest and perhaps most important attempt came from David Chaum, a cryptographer in the 1980s, whose ideas today feel prophetic. In 1989, he founded DigiCash, a form of electronic money designed to protect privacy. Chaum used cryptographic protocols that allowed transactions to be verified without revealing identities. It was elegant, revolutionary. But DigiCash still depended on a central company to issue and manage currency. Users needed permission. The system was private, but not decentralized. When the company struggled financially, DigiCash collapsed. Like a brilliant invention before its time, it flickered brightly and vanished. Yet the spark remained. Other minds picked up the flame. In the late 1990s and early 2000s, two names emerged repeatedly in discussions that now read like precursors to Bitcoin: Wei Dai and Nick Szabo. These were thinkers who lived on the cutting edge of cryptography and economics, idealists who believed money could be free from institutions. Their work circulated among small circles of developers. Obscure at the time, legendary today. Wei Dai proposed something he called B-money. It described a system where money is created through computational work and where participants maintain a distributed ledger to record ownership. There was no central authority, no bank, no permission required. Though only theoretical and never fully implemented, B-money was shockingly close to Bitcoin. Dai had drawn the blueprint, even if he never built the house. Nick Szabo, meanwhile, designed BitGold, often regarded as Bitcoin's closest ancestor. His idea was simple in concept, but groundbreaking in implication. Use computer power to solve cryptographic puzzles and reward that work with digital tokens. Each token would be unique, verifiable, and scarce. The system wasn't perfect because it lacked a unified blockchain to track ownership and avoid double spending. Still, BitGold demonstrated a critical insight that digital value could be tied to energy, just as gold was tied to the labor of mining. The parallel to Bitcoin is striking. Some even speculate that Szabo himself could be Satoshi, though he denies it, and the mystery remains unsolved. Then came Adam Back with Hashcash, originally designed not as money, but as a tool to fight spam. Hashcash required senders to perform small computational tasks before sending emails, making spam expensive and impractical at scale. It was proof of work in its most direct form. Years later, this very mechanism became the beating heart of Bitcoin mining. Back, remarkably, still works in the Bitcoin ecosystem today. Looking back, it's almost poetic. Chaum gave privacy, Dai gave decentralization, Szabo gave scarcity tied to computation. Back gave proof of work. Each vision was brilliant but incomplete, like four corners of a square without the lines connecting them. They lacked a central ledger that was public, immutable, and secured by game theory rather than trust in an authority. They lacked what Bitcoin would later introduce: the blockchain, a transparent record maintained by thousands of independent nodes, resistant to manipulation, protected by cryptographic consensus, growing one block at a time like a living organism. And then, during the global financial crisis of 2008, at the moment trust in banks and governments reached a historic low, a 9-page document appeared quietly on the internet. The Bitcoin White Paper, signed by a name no one recognized, Satoshi Nakamoto. No face, no identity, just a vision. Bitcoin succeeded where others failed, not because it invented something entirely new, but because it combined existing ideas with a genius architecture. Satoshi connected the missing lines. Blockchain solved the double spending problem that plagued earlier attempts. Mining incentivized participants to secure the network. The cap of 21 million coins established digital scarcity. Consensus replaced authority. For the first time, digital money could be owned directly by individuals without intermediaries. It was not a company, not a bank, not a government. It was a protocol, a network, a community. More importantly, it was unstoppable. DigiCash died when the company died. BitGold never launched because it needed trusted parties. Hashcash was useful, but not monetary. Bitcoin, however, lived on from the moment the first block was mined. The Genesis block, etched into history like the first rise stone placed in the village square, except this time on a global scale. Early adopters were mostly cypherpunks, cryptographers, and idealists. They weren't looking for profit, they were looking for freedom. They mined coins for fun, sent them back and forth like digital postcards. The idea that people would one day trade these coins for pizzas, cars, homes, or even use them as national reserves would have seemed absurd. But revolutions rarely look like revolutions when they begin. They look like experiments. Today, when we look back at the pre-Bitcoin era, we see not failure, but evolution. Each attempt chipped away at a problem. Each idea shaped the next. Bitcoin stands not as an isolated miracle, but as the culmination of decades of research, debate, and trial. It is the answer to a question many minds asked, but only one implementation solved. As we move to the next chapter, we step into the present, where Bitcoin has grown beyond the dreams of its creators, challenging gold, reshaping finance, inspiring nations, igniting controversy. In the modern world of ETFs, halving cycles, institutional adoption, and energy debates, Bitcoin is no longer an idea. It is a force. If you're ready, we'll explore how Bitcoin compares to its ancestors, not just historically, but fundamentally, and what makes it unlike anything the world has ever known. When Bitcoin was still young, its critics dismissed it as digital play money, nothing more than code, fragile, and temporary. They argued that real money needed physical presence or government backing. Yet, more than 15 years after the Genesis block, Bitcoin persists like a stubborn heartbeat beneath the global economy. It has survived crashes, forks, FUD, bans, and bear markets that would have killed weaker ideas. It has outlived exchanges, governments, and even many who once believed in it. And now, standing in 2025, we see something extraordinary. Bitcoin is no longer an outsider. It is a contender. But before we talk about ETFs and nation-states, we need to return to the core question. Is Bitcoin truly unique, or just a modern echo of old forms of money? It is both. Bitcoin inherits the essence of money's past, yet breaks from its limitations. It is a bridge between the ancient and the future, a digital descendant of gold, rye stones, cowrie shells, and every experiment in value humanity has ever attempted. Think of gold. For centuries, gold has been the ultimate store of value. It's rare, costly to mine, globally recognized. But gold is also static. You cannot email gold. You cannot divide it infinitely. A traveler carrying gold through borders faces confiscation risks. Buying $1 million worth of gold requires vaults, armored trucks, and trust. Bitcoin absorbs gold's scarcity, but strips away its physical burden. One Bitcoin can be divided into 100 million Satoshis. You can carry your entire net worth in 12 words stored in memory. You can send value across the planet in minutes. No vault, no permission, just mathematics. Some call Bitcoin digital gold, but that phrase, while useful, is incomplete. Gold can only be owned or stored. Bitcoin can be owned, stored, transmitted, verified, and audited by anyone with an internet connection. The difference is subtle but profound. Gold is wealth. Bitcoin is wealth plus mobility plus transparency plus programmability. Gold ended the era of barter. Bitcoin may be ending the era of trust-based money. Now consider fiat currency, the money we use every day. Dollars, euros, yen. They work because governments say they do. But fiat money isn't scarce. It can be created at will. And history shows what happens when creation becomes convenience, debasement, inflation, crisis. The 2008 crash exposed the fragility of systems built on debt and blind trust. After COVID-19, as governments printed trillions to stimulate economies, inflation surged globally. People felt it not in charts but in grocery stores, rent prices, fuel pumps. Money diluted. Value slipped away not suddenly, but silently. Bitcoin's supply is fixed forever at 21 million coins. No committee can raise it. No election can alter it. Its issuance reduces predictably every 4 years during halving events, like a heartbeat marking time. In April 2024, the fourth halving cut block rewards from 6.25 to 3.125 BTC, tightening supply even as institutional demand accelerated. Mining difficulty soared to historic highs, energy-backed proof of work proving once again that scarcity in Bitcoin isn't declared. It is earned. If gold is mined from Earth, Bitcoin is mined from electricity and computation, turning raw energy into digital value. And look at what happened next. In early 2024, Bitcoin spot ETFs were approved in major financial markets. BlackRock, Fidelity, ARK Invest, giants once distant now compete for Bitcoin exposure. Billions flowed in. Pension funds began allocating percentages. Banks that once laughed now sell custody services. Energy companies partner with miners, turning wasted power into profit. El Salvador, once mocked for adopting Bitcoin as legal tender, continues to accumulate reserves and attract foreign investment. Other countries, Argentina, some African and Latin American regions, study similar policies, exploring Bitcoin as a hedge against currency collapse. This was unthinkable a decade ago. Bitcoin is becoming a macroeconomic instrument, not just a technological experiment. Yet it never changes its rules to please anyone. Not Wall Street, not governments, not miners. It has no CEO, no office, no board. It is alive because people run nodes, secure blocks, trade coins, believe in it. The network is the authority. Consensus is the king. This is where Bitcoin diverges from every currency before it. In old money systems, authority flows from the top down. Bitcoin flips that axis. Authority flows from the bottom up, from users, miners, node operators, developers. No previous monetary system, stone, gold, fiat, or digital prototype achieved this balance. Earlier attempts like DigiCash depended on corporations. Early cryptocurrencies required trusted issuers. Even gold needed vaults, banks, armies. Bitcoin needs none of these. Its trust emerges not from rulers, but from code and game theory. If one miner cheats, the network rejects the block. If a government bans Bitcoin, miners relocate. If an exchange collapses, the chain continues. This resilience is its revolution. Yet Bitcoin is not perfect. Transactions on the base layer can be slow and expensive during congestion. But like the internet itself, Bitcoin is evolving. Layer 2 solutions such as the Lightning Network allow near-instant microtransactions with tiny fees, enabling global commerce without intermediaries. Developers work on sidechains, scaling protocols, and privacy improvements. Innovation builds around the core, but the core remains immovable. Proof of work, fixed supply, decentralization. Every generation builds tools the previous generation could only imagine. Rise stones taught us value can exist without physical movement. Gold taught us scarcity is powerful. Fiat taught us trust can be fragile. Early cryptography taught us digital money is possible. Bitcoin combined every lesson, rejected every flaw, and became something unique. So, has anything similar to Bitcoin existed before? Conceptually, yes. Functionally, no. Nothing in history combines scarcity, decentralization, immutability, transparency, and global accessibility into one coherent, unstoppable system. Bitcoin is not a copy of the past, it is the culmination of it, the next step in money's evolution. Perhaps not the final step, but certainly a revolutionary one. And now we stand on a threshold. Bitcoin continues to grow, halving cycles, adoption curves, geopolitical influence. Whether one loves or hates it, one cannot ignore it. Bitcoin is reshaping how we think about property, freedom, and time itself. But beyond charts and technology lies something more human. How does Bitcoin make us feel? What does it mean emotionally, philosophically, personally? Does it liberate us or challenge us? In the final chapter, we leave history and economics behind. We speak as people, not analysts. We reflect. The story becomes personal. When I think about Bitcoin, I don't think first about numbers or charts or price predictions. I think about what it represents. Not the technology, but the idea. An idea that money could exist beyond walls and borders, beyond the influence of those who hold power, beyond the fragility of trust that history has broken again and again. Bitcoin is often described as code, as digital gold, as a network. But to me, it feels like something more intimate, something human. For thousands of years, money was a mirror of trust. We trusted leaders, banks, kingdoms. We trusted vaults and treaties. We trusted signatures on paper. And time after time, trust was tested, sometimes honored, sometimes betrayed. Empires fell, currencies collapsed, fortunes evaporated. The world learned, painfully, that trust built on authority can be taken away by authority. Inflation is not just a statistic, it is the silent theft of time. Savings are not just numbers, they are the hours of our lives stored for the future. When the value of money fades, it is not only wealth that disappears, but possibility. Bitcoin emerged as a whisper against this reality, a quiet refusal, a belief that money could be governed by math instead of men, by rules instead of rulers. Some see that as threat, others as liberation. To me, it feels like balance, like humanity's attempt to correct the asymmetry of power in finance. I think about a young entrepreneur in Nigeria who can get paid globally without needing a bank. A family in Argentina watching their currency crumble, turning to Bitcoin not for speculation, but for survival. A developer in Vietnam stacking sats to preserve value in a world where inflation eats slowly like rust. Bitcoin is not abstract for them. It is protection, a lifeboat in economic storms. Of course, Bitcoin is not a perfect savior. It is volatile. It swings like a living creature, roaring in bull markets and curling into silence in bear seasons. People lose money in greed, others walk away too soon. But volatility is the price of discovery. Gold was volatile once. The internet was chaotic once. Every transformative technology grows through uncertainty. The question is not whether Bitcoin is perfect now, but whether it is progressing. And it is. What fascinates me most is not Bitcoin's price, but its philosophy. It asks us to rethink ownership. If you hold your keys, no bank can freeze your account. No government can seize your balance. No corporation can deny access. For the first time in human history, value can be stored in a string of numbers known only to you, protected by cryptographic truth. That kind of sovereignty was once reserved for kings. Now it fits in the pocket of anyone willing to learn. Bitcoin also asks us to rethink time. Unlike fiat money, which depreciates quietly, Bitcoin rewards patience. Halvings rhythmically slow supply, creating long waves of scarcity. Holding Bitcoin is not just investing, it is an act of belief in the future, a vote for long-term thinking in a world obsessed with immediacy. It whispers, do not rush, build, save, prepare. It aligns money with time instead of against it. There's a beauty to that. Sometimes I imagine historians centuries from now studying this moment the way we study the first mint of gold coins or the rise of banknotes. They will see 2009 as a genesis, not only of a currency, but of a new relationship between people and value. They will read about volatility, mining debates, regulatory battles, market cycles, social divides. They will see governments resisting at first, then slowly integrating. They will watch institutions shift, nations adapt, technology evolve. They might say Bitcoin was inevitable, the final form of money until something even more remarkable emerges. But today, living inside the story, it doesn't feel inevitable. It feels alive, controversial, hopeful, like watching the birth of a river that one day might become an ocean. Many underestimate Bitcoin because they judge it by its price today. But price is only the noise. The signal lies underneath. Adoption, decentralization, immutability, resilience. No system in history has ever offered value without trust in authority. Gold required vaults, fiat requires governments, previous digital currencies required issuers, Bitcoin requires only consensus. That is new, that is radical. Yet for all its innovation, Bitcoin feels ancient, like it answers a question humanity has been asking for thousands of years. Can we create money that no one controls, yet everyone can trust? Every predecessor tried. Rye stones tried through social consensus. Gold tried through nature's scarcity. Fiat tried through governance. Cryptographers tried through prototypes. But only Bitcoin stands at the crossroads of all their lessons. It is not gold, but it carries gold's scarcity. It is not a bank, but it holds balances. It is not a government, but people believe in it. It is not a stone. But value does not need to move to be owned. It is not a company, but millions build its infrastructure. Bitcoin is a story written not by kings or institutions, but by humanity itself. And like all great stories, it is unfinished. So has anything similar to Bitcoin existed before? In fragments, yes. In full, no. Bitcoin is not a repetition of history. It is a convergence of history, a mirror of past experiments and a window to what money could become. When I step back and look at Bitcoin, I don't see just a network. I see a question, a challenge, a possibility. I see millions of people quietly opting out of old systems and stepping into something borderless, open, transparent. I see the democratization of value. I see a world where your wealth is not defined by where you were born, what passport you carry, or what institution approves you. I don't know what Bitcoin will be in 100 years. No one does. But I know this. Something like Bitcoin has never existed before. Not with this scale, this resilience, this independence. And even if someday a technology surpasses it, Bitcoin will be remembered as the spark that changed how humanity thinks about money. Maybe it is not just money. Maybe it is a message, a reminder that value belongs to people, not to power, a belief that freedom can be encoded, a hope that trust can be decentralized. And for me, that is why Bitcoin matters, not because it is new, but because it completes something ancient. Because it feels like the next chapter in a story that began with stones and gold and ends somewhere we cannot yet imagine. Perhaps, in the end, Bitcoin is not only a currency, but a mirror of us, our fears, our dreams, our desire to build systems that outlive empires. A future built not on trust, but on truth.